Hello everyone, Clifford Bennett, Chief Economist at ACY Securities. I trust you've had a good week. It was certainly that big week we were expecting in terms of the Fed's last rate hike and Q2 GDP, which came out much stronger than I expected. So got that one wrong. My apology on that. I thought it would be a weaker number for sure, but no, a little bit stronger. Nevertheless, all the monthly data that I've been speaking of lately, which is far more recent data than that number, is all pointing still to a US economy that is slowing. So despite Q2 having picked up from Q1, Q3 is not looking good. So I do think the view that the second half of this year will see a weaker US economy remains very much in play as a strategy. Over in Australia today, we saw retail sales plummet 0.8% in June, and that's a big down move for that number. Mind you, the previous month was flat, and the month before that was up 0.8%. But for 3 months now, that means despite higher prices in some areas, retail sales have remained flat. And the nature of the decline in retail sales is very clearly the more luxury items people are cutting back on and moving away from cafes and restaurants towards buying their food to take home. So the price shifts within the data also confirm that consumers are under a fair bit of pressure, and it does point to that risk that I've been going on about all year now, that a possible recession in Australia. In the background of all that, of course, and producer prices in Australia today, they were up 0.5%, and that increase was largely driven by still skill shortages for workers and higher energy input costs into the manufacture of some goods. So, these are not the sorts of numbers you really want to see, where you're getting quite firm, robust, though trending lower, as is headline inflation, but still very firm, robust producer prices up 0.5% and retail sales down 0.8%. It says a lot about the state of the Australian economy, and I continue to expect really some further weakening overall in trend terms there. For markets, we've seen this big down day in the US, and we're seeing another big down day in Australia today. This is very damaging price action coming after the bullish kind of catalyst that we've seen this week, which were last Fed rate hike, and particularly that second quarter GDP number, which was above expectations. So it's as if every good reason for buying stocks has now been exhausted, well, of a major kind anyway. And I think that's quite troubling for the market. And I continue to suggest this is a rally that was stretching away from the fundamentals of the US economy. And I still believe that to be the case. Is this the big downshift in prices, stock prices, that must inevitably occur? Or is it simply a position squaring post those big ticket items? So very difficult to say in the first 24 hours. We'll know more by the end of New York trading Friday. I'm a little bit concerned it could be a big down Friday for the US market though, and I'll be watching that very closely. We saw a similar kind of upheaval in currency markets as we saw Euro and Australian dollars weaken, the US dollar strengthen. And that was partly driven by the fact that the ECB raised rates again. And in a way, it was also that kind of, well, that's all the good news we're going to have for that for the moment. Let's get out of those positions. And that's all it might be in the stock market as well. But it does have a certain sense of power and force to the downside at the moment that is a little bit worrying and troubling. I suggest going to Friday New York trading with a very close spotlight on what is happening. Because this trading session could determine the outlook for the next 1 to 3 months for the US stock market. If not today, Friday, I think by close Monday in New York, we'll have a much clearer picture of are we going sideways or are we going up or down for the next 1 to 3 months. I'm fearful that it will be to the downside. So let's see how that price action stacks up. We did say that this would be the week that would determine the medium-term outlook, and I still think that's the case. We just have to see how these price action gyrations pan out just immediately post all those big ticket items for a very strong lead, really, in terms of market positioning and where the market will be going from here. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.